Hey Puppy Trades! I wanted to do a video analysis update on Cathie Wood's corner of the market. That's right, in this video, we're going to be talking about the growth stocks, some stocks that are sexy. We're really going to be following up on this post in this video that I made on May 28th. I said expect summer fireworks from Cathie's growth stocks in sectors like electric vehicles, solar, and software. So we'll talk about clean energy, we'll talk about software, we'll talk about some miscellaneous stocks like fake meat, crypto, and whatever CRISPR Therapeutics does. So let's get right into it. Here is Tesla. The institutions have been taking advantage a lot recently of Tesla's extremely low implied volatility. So this is the cheapest that options have been on Tesla in the past 52 weeks. That's what IV percentile and IV rank means. That means that right now, the options on Tesla are very discounted, okay? And what that also means, retail traders, they're pretty frustrated with Tesla right now, right? They're pretty bored. They're gonna say Tesla doesn't move, right? You'll see stocks. We saw this recently with Pfizer. We saw this recently with Advanced Micro Devices, that retail traders were saying this POS doesn't move. And what was really going on was implied volatility was at the very bottom of its 1-year range. Institutions were accumulating cheap options while retail traders were just too frustrated. And then what happens? They explode. And so that's why we use low implied volatility. We use these screeners like the bar chart, straddle, and triangle screener to find stocks that are actually going to move, okay? Trading isn't just about deciding if a stock's gonna go up or down. If that were the case, we'd all be billionaires, because a coin flip, it gives you a 50% chance that a stock's gonna go up or down. You have to time that stock. You have to figure out when will this stock move. And we look at Tesla, it showed up on the bar chart, straddle, and strangle screener many times on October 29th before it had a monster move in mid-November that was driven by news, this bombshell news that Tesla was joining the S&P 500. So it's very clear the institutions were very aware that Tesla was about to have a huge news event. Okay, so that's why what you'll see when you keep track of the bar chart, straddle, and strangle screener, when you keep track of stocks that have extremely low implied volatility, all of a sudden a big news story comes out. Okay, and so what's really going on? Well, let's see right now. Tesla is all over the bar chart, straddle, and strangle screener, while options on Tesla are the cheapest they've been in the past 52 weeks. Okay, we can put 2 and 2 together and say Tesla's about to have a monster move. This is from August 9th. We see huge, interest in options on Tesla. This is from July 20th. We see that Tesla is taking up almost every single slot on the bar chart, straddle, and strangle screener. So that's really important to realize, is that it's been weeks that institutions have been accumulating options on Tesla, and I think we're about to find out why. So if we look at Tesla, we have a huge wave 1 and a wave 2, this monster wave 3 impulse, and then an ABC correction puts in a wave 4 low. So this is exactly what I said about Advanced Micro Devices, right? 2 months ago that sounded crazy, was that this whole wave 3 rally placed at this wave 4 low was going to be replicated, right? And then, similar idea with ROKU, similar idea with, a lot of stocks, that this huge, impulse structure from March to February gets replicated in an 11-month rally, takes place again. But this time it might happen quicker than 11 months. So let's look at Tesla right now. Wave 1, wave 2, huge wave 3 impulse, and an ABC correction puts in a wave 4 low. Then we have another wave 1 and another wave 2. So that gives us clear invalidation levels. We want to make sure Tesla's above 546. We want to make sure Tesla's above 539. If it is, we can say this large degree wave 4 is in, and this smaller degree wave 2 is in. So Tesla is within right now wave 3 of a larger degree wave 5. So in the very short term, wave 3 should take Tesla to 929, which will be very important because that will break this wave 3 high. It will confirm all of this was accumulation. It will confirm all of this was institutions loading up this dip, okay? So we're going to know what the wave theorists already know, is that this 38.2% retracement is a wave 4. We're within a wave 5 higher, and institutions have been accumulating options on Tesla in this tight range, while implied volatility was at the very bottom of its 1-year range this entire time. So I believe Tesla's going to 1368. I think very aggressively that happens by the end of the year. pretty conservatively, I actually expect this will happen within the first quarter of 2022. And that sounded crazy about advanced micro devices 2 months ago. It doesn't sound so crazy right now. We're seeing a lot of stocks have already broken this first quarter high in the growth sector. So why might I say this could happen quicker than we expect? Well, when we look at Li Auto, when we look at XPEV, we might see why, but even just looking at Tesla, what if that's not a wave 3 and that's not a wave 4? It's very possible that this is another wave 1 rally, and this is a wave 2 correction. So Tesla is within a nest right now. It's within not wave 3 of wave 5, but wave 3 of wave 3, and that all that essentially means is that we're still expecting that Tesla will go the length of this rally placed at this low, but in this scenario, this more aggressive bullish count, Tesla will not stop at 1,368. It will continue higher, okay? So that's the basic idea. I'm expecting Tesla into the 1,300s within the first quarter of 2022. NIO, very similar idea. So we talked about this, idea that a stock can break below a recent IPO low and still be within a very bullish impulse. So I think the full count for NIO looks something like this. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2. NIO is within wave 3 of wave 3 right now. I think there's another possible way to count it where you say that's not wave 1, that's not wave 2. This is a wave 3 and a wave 4 that NIO is putting in. But either way, the expectation for NIO is the same. The length of that huge rally from March to February gets replicated, and it takes NIO into the 90s. So this is what I'm saying right now. It could be something like this, where that's a large wave 3. This is a large wave 4. And then we're expecting that NIO will go on a wave 5 higher in this count, where this whole rally gets replicated. NIO ends up in the 90 range, I believe, with Tesla within the first quarter of 2022, possibly by the end of the year. So this is one way to count NIO, that this is a 1, 2, 3, 4, and then wave 5 will take NIO into the 90 range. And then another way to count NIO that's a little more aggressive says that this is another wave 1 and another wave 2. So it would essentially just be saying that this is a 1, 2, 1, 2 Elliott wave nest. I actually like this more with NIO. I think it's more accurate. And all it essentially means is that when NIO gets to the 90s, that won't be the top. So in the smaller degree right now, bulls still want to see NIO's going to hold above 30. Okay, I know that's far away. It wasn't too far away when I talked about it. We talked about this 61.8% retracement being a pretty important validation level. And it looks like right now, from this large wave 2 low, we have a smaller wave 1 and a smaller wave 2, very similar to what we're seeing on XPEV and Li Auto. If NIO breaks above 55, that's going to be a huge deal. It'll be 1, 2, 3, 4, 5 waves from this low that forms in May, that a lot of growth stocks have already formed an impulse from. We'll talk about advanced market devices. We'll talk about ROKU. We'll talk about Enphase Energy. We'll talk about Netflix. There's a lot of stocks. This exact same May 10th low. We've already seen a 5 waves impulse develop. We've already seen this high from the first quarter get broken. So it's going to be a big deal when NIO breaks above 66. It's also going to be a big deal when NIO breaks above 55. So I've got a lot of ambitions for NIO. I've got a lot of ambitions for Tesla, and they're not going to be alone. We look at XPEV right now. It's a very similar idea on the largest degree, that this is a wave 1. This is an ABC correction that's putting in a large degree wave 2. So the biggest invalidation level is still going to be that wave 2 low. Yes, I know that's ridiculously far away. I think, if someone wanted to be tighter, or someone hypothetically wanted to be tighter, I'm just going to hold XPEV, to be honest. I want exposure to the electric vehicle sector. I really like this sector, and I got an XPEV below 30, so I'm just going to keep holding. If I wanted to, I could move my stop loss up to break even, but XPEV, wave 1, ABC wave 2, we talked about Li Auto doing this exact same thing, where it breaks above this Ichimoku cloud, gives a lot of evidence that yes, that is the wave 2 low. We've started a new bullish cycle to the upside. The exact same thing occurs with Li Auto, so what I've done with XPEV, on the smaller degree, I think it could be very similar to NIO, where that's a wave 1 and that's a wave 2. We want to see, will XPEV break above 47? It'll be a big deal if it does, because if XPEV breaks above 47, it would look something like this, where that's wave 1 and wave 2 from the low that is formed in May, and then we're going on this wave 3 impulse higher, and then we'll have a wave 4 and wave 5. And essentially, we could see within this cycle that XPEV breaks above this 1124 high. So it could look something like this, where from that low that's formed in May, right, that very important May low that we've seen so many growth stocks break out above, that XPEV forms something like this, and it gets above this wave one high from November. So that's going to be a huge deal. What's that going to mean? Well, that's going to mean the institutions have been accumulating XPEV this entire time, and that this stock that's very recently, IPO'd is very early in its life cycle, and it's going to be off to a very good start. Institutions have accumulated it, for the past 6, 7, 8 months potentially. So that's XPEV. We'll look at Li Auto too. It's almost identical, and that's the reason we take these holistic approaches, is that we can see this across the solar sector, the electric vehicle sector. It will help guide our decisions on, other corners of the market. We see that this is a wave one. We have an ABC correction we put in wave two. And this wave one is very cleanly subdivided into 1, 2, 3, 4, 5 waves. Clearly an impulse structure. Then we have an A, B, C correction that puts in a large degree wave two. So we want to see Li Auto hold this low of 15. I got in Li Auto around 22, 24. But regardless, I could move my stop up to break even if I wanted to. I'm going to continue to hold Li Auto. I'm going to continue to hold XPEV. I really like them. And I think that they're another one where, just like XPEV, just like NEO, it's going to be really interesting to see if we break above this high of 36. That's going to confirm that this wave two low on the very smaller degree ended at 26. We're within, a wave three of wave three impulse higher that almost certainly would take Li Auto above this November high, the same November high that XPEV forms, which is 47. Then XPEV and Li Auto will confirm that for the past 6, 7, 8 months, institutions have been accumulating these stocks that very recently IPO'd. So when they break above this wave one high, that's going to be a huge deal. When they break above this smaller degree wave one high, for Li Auto it's 36, that's also going to be very important too. So right now, Li Auto and XPEV have given a lot of signs that is the large degree wave two low that we formed in May, and that these two, kind of staples of not only the clean energy sector, but also Chinese stocks are going to be doing very well, especially when they break above these November highs that they form. So that's Li Auto, that's XPEV, that's Tesla and NEO. Let's talk about some Acrimoto. I think this is an American electric vehicle company. It's another one. The last time we talked about Acrimoto, it had a 39% short float. So potentially a huge squeeze in the making for FUV. This is a 1, 2, 3, 4, 5 large degree wave one. And ABC correction puts in a wave two low at the 78.6% retracement. So that's what we want to see right now. In the bigger picture, this 7.32 will not be broken. So I know that's far away, and I think we might have a closer level to trade against too, that this is another wave one and another wave two, and now we've broken this wave one high of 18.21. So we want to see, probably in the tighter picture, that this wave two low of around 12.07 isn't broken, and that FUV Acrimoto is within wave three of wave three. If the length of this wave one rally placed at this wave two low gets replicated, it's another one where from March to February, we see that 2020 rally replicated. While Tesla's on its way to 1300, NEO is on its way to 90, Acrimoto will be on its way to 43. So it's a sector-wide rally that we're expecting in the electric vehicle sector, the clean energy sector. I'm gonna talk about Plug Power right now. This is another one. It's 1, 2, 3, 4, 5, large degree wave one. ABC correction, large degree wave two at the 78.6% retracement. And then if we look at Acrimoto and if we look at, Plug Power, they're very similar, that this is a huge, guess what, 10, 11 month rally from March to February that's going to be replicated from the May 10th low. It's the same May 10th low for many of these growth stocks. The length of wave one placed at this wave two low potentially takes Plug Power into the crazy area of 91 for what's actually going to be a conservative wave three target. So that's one I expect, definitely is going to need some time. The first quarter of 2022 would be kind of my just right time target, that we see the length of this wave one placed at this wave two low get replicated. Lots of interest in Plug Power in the options market. I think it's getting ready for a monster move. Extremely low implied volatility recently on Plug Power. We see the very bottom of its 1-year implied volatility range was on August 6th. Okay, they know you're bored of electric vehicles. They know you're bored of clean energy. That's why they're accumulating all these options right now. So Plug Power, we want to continue to see this low of 18 hold. If it does, that's wave 2. And then while Acrimoto is going to 43, Tesla's going to 1368, Neo's going to the 90s, Plug Power could be going to the 90s as well. So that's Plug Power. Here is Bloom Energy. It's another one we've talked about, a wave 1 and wave 2, another wave 1, and an ABC correction puts in another wave 2. We've got 2 wicks that's formed at the 61.8% retracement of this rally. So right now, we haven't broken above 18, and I don't think we're going to break above 18. The length of wave 1, placed at this wave 2 low, this rally from 316 to, guess when, February, placed at the May 10th low. It's the exact same May 10th low, gets replicated. The length of this wave 1, placed at this wave 2, takes Bloom Energy all the way to 60. It's another one with Plug Power that could happen within the first quarter of 2022. Right now, I think the only way to play Bloom Energy is tight against this low of 18.40, call it 18. But if we look at First Solar, Enphase Energy, we're seeing something pretty interesting. So I've talked about this larger degree picture of First Solar pretty often, where this is a 1-2, 1-2 Elliott wave nest. So this is essentially almost 10 years of accumulation on this solar energy stock. And that's kind of evidence that this is a sector that's here to stay. Okay, the clean energy stocks, they're here to stay, especially in the solar sector. Here's a post that I made recently about the relationship between the solar energy sector and the S&P 500. So what I did is I took the performance of TAN, T-A-N, compared to the performance of the S&P 500, and it forms a ratio that has a pretty clean Elliott wave count. So this is a 1, 2, 3, 4, 5 large degree wave 1 for the relative performance of solar energy stocks compared to the S&P 500. So essentially during this time, this wave 1, monster outperformance in the solar energy sector. Then during this ABC correction, wave 2 low, big underperformance in the solar energy sector. Now this wave 2 on this ratio chart ended at exactly the 61.8% retracement of this wave 1. So I believe just like what we would do, for a normal stock, that's wave 1 in relative outperformance for solar energy. That was wave 2. We're about to begin wave 3, 4, and 5. And essentially we could see a long-term outperformance begin in the solar energy sector as a whole. First Solar is kind of backing that idea that yes, this sector has been accumulated for nearly a decade. It's a 1-2, 1-2 Elliott wave nest. Now we've broken and we've closed above all of these highs from this accumulation range. So if we zoom in on First Solar, there's another important thing. Here's a 1, 2, and then I believe another 1 and 2. So if we take the length of this smaller degree wave 1, place it at this wave 2 low, FSLR should go to around 120, have a shallow wave 4 correction, and then go on a wave 5 higher, potentially as high as 160. So this is another stock where I'm looking for, a large rally, to continue to take place. It's begun, and I'm looking for, it to continue into the second half of the year. Within the first quarter of 2022, I would expect this, wave 3, 4, and 5 rally higher, potentially as high as 160 to have occurred. But let's look at First Solar on the smaller degree, because we got something pretty interesting, similar to advanced micro devices, very similar to Enphase Energy, which we're about to talk about. This is from the May 11th low. They mixed it up this time. The May 11th low, a 1, 2, 3, 4, 5 waves impulse, okay? Why is it important that First Solar has broken above this high, okay? No matter how you count it, this is clearly a 5 waves impulse, okay? Whether or not you said, it was a little different, you could move these numbers a little bit if you wanted to, and say that this was a huge wave 1 and a wave 2. This is pretty similar to what happened on advanced micro devices, where that dip was a wave 2 low, and then we had that big explosive move to the upside. But the whole point is that we've formed 5 waves from this May 11th low. So what does that mean? Well, Elliott waves are fractal in nature. If this is a new impulse cycle, it really strengthens the probability that yes, this May 11th low is extremely important. It's marking the end of the corrective cycle that we had from this wave one high, and these 5 waves are helping us confirm that a new bullish cycle has begun for FSLR. So there's a lot of evidence that this low of 67 is going to hold for a very long time, possibly for the rest of time, that 67 is never broken for First Solar, and we're going to explode higher. It's going to be a huge deal when First Solar breaks above the January 25th high. The same January 25th high, by the way, Apple has already broken, that we're talking about Tesla is about to break as well, or going to break in the future. But anyway, that's First Solar. Here's Enphase Energy. What am I talking about when I'm talking about these 1, 2, 3, 4, 5 waves impulse? Advanced micro devices is a great example of this. I think Netflix is a good example of this. I think Roku and Cloudflare are good examples of this. But essentially, from this May 10th low, we've seen a 1, 2, 3, 4, 5 waves impulse develop. That strongly supports the case. This May 11th low, this May 10th, it's the exact same May 10th, May 11th low, is extremely important for Enphase Energy, for First Solar, for many software stocks and clean energy stocks. It's a 1, 2, 3, 4, 5 waves impulse. It forms a large degree wave 1. Then we have a, potentially an ABC correction to buy a wave 2 in the future, but potentially not. This could just be, just like advanced micro devices, that's wave 1. And this is wave 2 for Enphase Energy, and we're going to go on an explosive move higher. But regardless, what's really important for Enphase Energy, for First Solar, for advanced micro devices, for Roku, for Cloudflare, that's 1, 2, 3, 4, 5 waves. That's a new impulse structure that is formed for many growth stocks. From this May 11th, May 10th low, it strongly supports the case that from May, we're going to be going much higher in the clean energy and software sector. We'll talk about the software stocks, in a little bit. But this is 1, 2, 3, 4, 5 waves. This is a new impulsive structure. That means very likely this low of 108 will hold, and we're going to be exploding higher for Enphase Energy, for First Solar, for many of these clean energy stocks. Here's Polar Power. I think it's a laggard in this sector. I still like it. Very high risk stock, but it's another 1, 2, 3, 4, 5 large degree wave 1. We have an A, B, C correction. It looks like we're ending wave 2 right now at exactly that 78.6% retracement of this wave 1 rally. So Polar Power, it's a small solar energy company. There's really no low to trade against. I think the 78.6% retracement, perhaps this wave 2 low in the short term of 6.62, but I took a half position size with Polar Power, because I know how risky it is as a small cap solar energy stock. But I think this is a 1, 2, 3, 4, 5 large degree wave 1. We have an ABC correction. We're right at the 78.6% retracement. We have First Solar, Enphase Energy, all these clean energy stocks forming 5 waves impulses. I really like Polar Power. It's extremely risky, but it's 1, 2, 3, 4, 5 waves. That's wave 1. An ABC correction. It looks like we're putting in wave 2 right now at exactly the 78.6% retracement. If the length of wave 1 placed at the wave 2 low is a minimum wave 3 target, there's potentially more upside for Polar Power that will take it into the 30s when we talk about Tesla and NIO and XPeng and Li Auto going on these huge runs. Polar Power almost certainly will be moving with them. I want to talk about the software stocks right now, but first we have to talk about some boring stocks, because I need a preface before we talk about the software sector. A potential scenario that I've kind of mentioned previously, but essentially, we have in the industrial sector, in the oil sector, in the travel and leisure sector, the idea that we've begun a wave 5 higher. So for the Dow Jones ETF DIA, this is wave 1 and wave 2. This is wave 3 and wave 4. We've broken this wave 3 high. Okay, so we're within wave 5 right now. Okay, so I believe this is wave 1 of wave 5 and wave 2 of wave 5 for the Dow Jones ETF DIA. So when the Dow Jones ETF DIA gets to this small degree wave 3 target of 361, it may have a shallow pullback and then go on a wave 5 higher, potentially into the 370s and the 380s. What happens when the Dow Jones ETF DIA gets into the 370s and the 380s is that bulls will expect, at least in the travel and leisure, the value side of the market, that this 1, 2, 3, 4, 5 waves impulse will be corrected. Okay, and so that's kind of the theme that we're possibly seeing, is that while the reopening stocks like the Dow Jones ETF DIA, Disney, some of these oil stocks, some of these banks, while they're correcting this 1, 2, 3, 4, 5 waves impulse higher, and the reopening stocks are pulling back, there's a scenario in the charts where the stay-at-home stocks are actually doing very well. So we're going to talk about that, but there's an eerie, kind of situation potentially in the future where the reopening stocks, they're pulling back after they complete this 1, 2, 3, 4, 5 waves impulse, but the stay-at-home stocks, they're just beginning. So we're going to talk about that. I just want to reiterate this point with Disney. By the way, if DIA is above 337, I'm expecting a run into the 370s in the short term. Disney, it's another one, the poster child of the reopening stocks, going on a 1, 2, 3, 4, 5 waves impulse higher. And then when Disney reaches the length of wave 1, placed at the wave 4 low, that's going to be that wave 5 minimum target of 216. So when Disney's between 215 to 230, bulls should expect, yes, this is 1, 2, 3, 4, 5 waves. Prepare for an ABC correction to buy this wave 2 dip. But what's happening in the charts is that while the reopening stocks like Disney are completing this 5th wave higher and pulling back, the stay-at-home stocks are doing very well. So we'll talk about that when we look at the software sector. This is the last one. Berkshire Hathaway, the banks and the tanks, they're going on a 1, 2, 3 ABC wave 4 and going on a wave 5 higher. The length of wave 1 placed at the wave 4 low very conservatively takes Berkshire Hathaway to 310, right? And then that's kind of where bulls will start to expect, okay, maybe some of these value stocks will go 1, 2, 3, 4, 5 waves higher and correct this cycle, okay? But the idea right now is that while Disney, oil stocks, some travel and leisure stocks, while they're correcting this 5th wave, the stay-at-home stocks are doing very well. So that's what we're about to talk about. Let's look at Cloudflare right now. This is one, it's been a leading indicator for this sector. It went on a huge wave 1. It had an ABC correction. It put in a wave 2 low, and then it's broken above this February 10th high, and it's gone on another impulse cycle higher that is clearly, undoubtedly, subdivided into 5 waves. So this is wave 1 and wave 2, and then we have another 1, 2, 3, 4, 5 waves impulse to the upside. So what's that mean? Well, that means even if Cloudflare pulls back, we would expect this dip to be supported, and we would expect more upside for Cloudflare. But the important thing right now, it's already broken this first quarter high. In a lot of these growth stocks, they formed the exact same high between around January 25th to around, the middle of February. Cloudflare, a lot of, stocks in the growth sector have already broken above this February 10th high, and they've already formed 1, 2, 3, 4, 5 waves impulses. So Cloudflare, very likely leading the growth stocks higher. And if we look, an important thing is that they're forming these 5 waves impulses from this low. So what's that mean? Well, that means if we look at ROKU right now, this is clearly 5 waves from this May low. That's it. Really, if you put it right here or right here, it makes no difference. That's 1, 2, 3, 4, 5 waves from this May low that ROKU has clearly formed right now. Well, that means very likely that this low that's formed on May 6th is not going to be broken. It's a very important low because it's the beginning of a new bullish cycle. So ROKU has clearly formed 5 waves from that early May low. More importantly, it's broken the February 16th high. So it's confirmed, yes, this was a correction. Yes, this was a base that was forming. This was institutions accumulating, stocks and options on ROKU before they rode the next leg higher. I don't believe the May 6th low will ever be broken, at least not until much more upside has happened for ROKU. The evidence for that is that it's formed 1, 2, 3, 4, 5 waves, and it's broken this wave 3 high. So I'm going to delete these small numbers. We're going to zoom out to the bigger picture and continue to talk about it. I prefer to focus on ROKU in this larger degree, but it still very importantly has formed 5 waves from that May low. We talk about 5 waves forming from the May low in many growth stocks. So ROKU, wave 1, ABC, wave 2, huge wave 3 impulse, right? It's too crazy to imagine that from this 11-month rally that will replicate this move. But I do believe that's going to happen. This is a wave 3. We have an ABC correction. We put in wave 4 at exactly the 50% retracement. So I don't believe this wave 4 low will ever be broken at least not until we've had significant upside for ROKU, and that this low of 272 will hold. This is wave 3. The length of wave 3 placed at the wave 4 low will take ROKU on a wave 5 higher to 707. I expect that will happen within the first quarter of 2022. And if we look right now at ROKU, this wave 3 and wave 4, that could be the more conservative count. This, like Tesla, could be another wave 1 and another wave 2 that is formed from this low. And so ROKU would be within wave 3 of a larger degree wave 3. The minimum expectation would still be the same. The length of this rally placed at this low would give a minimum target of 707. But in this scenario, 707 won't be the top. It'll be the minimum wave 3 target. We'll have a shallow wave 4 correction. We'll go on a wave 5 higher. So ROKU, 5 waves from the early May low. Advanced Micro Devices and Datadog have formed 5 waves from this low. So Datadog was in that video from late May about Cathie Wood stocks, and it's another one. 1, 2, 3, 4, 5 waves, large degree wave 1. I had this on the 2-year chart. This was an A, B, C correction that we put in exactly the 50% retracement of wave 1. So this is wave 1 and wave 2. And then what has Datadog done? If we zoom in, this is, you guessed it, 5 waves from this low that is formed in, you guessed it, early May. So we see so many growth stocks are forming 5 waves impulses from this early May, this mid-May low. That's a huge deal. It means very likely that early May low will not be broken. It is a very important low because it is the beginning of a new bullish cycle. So this is Datadog. It's clearly formed 5 waves from this low. Okay, that means that this is a new impulsive cycle that has begun. Even if Datadog pulls back, we're already expecting that is going to be a dip that is supported. So one potentially really nice opportunity in the market, even I would say, is if Datadog pulled back and ever retested this May low, that would be a huge opportunity because we already know this is a bullish impulse. So if Datadog pulled back, it would be a corrective structure that bulls would look to buy and then ride this waves 3, 4, and 5 higher. So Datadog looking really good. There's not much to do with it right now except for use it as a leading indicator. It's broken above its wave 1 high. This is an expanded flat, so it's A. Wave B makes a slightly higher high, and then wave C. But when was this high? This high was from February 10th. Okay, it's a very similar high and a very similar low that many of these growth stocks have formed. And we've got a little cheat sheet right now from Cloudflare, from Datadog, from ROKU, from Advanced Micro Devices that we'll talk about next. That yes, this high will be broken and this low will hold. So Datadog in the longer degree, bigger picture cycle, the length of this rally placed at this low will eventually take it all the way to 158. So if bulls got an opportunity to buy Datadog in the future, they would be very eager to take it. Let's just say that. So that's Datadog. Here's Advanced Micro Devices. It's another one. I mean, what is this, right? Okay, let's just zoom out to the bigger picture for AMD first. AMD, Apple, Qualcomm. I had Apple plus the semiconductors at the very beginning of this quarter in mid to late June as the number 1 sector that I was expecting huge outperformance. Okay, and this is a wave 1 and wave 2. We had a huge wave 3 impulse and an ABC correction put in this wave 4 low at exactly the 38.2% retracement. So we said, yes, that is the wave 4 low. And, this high of wave 3 is going to be broken, and it's going to confirm, yes, this was all months of accumulation, not only in the stock market, but also in the options market. AMD and Apple were all over the bar chart straddle and trickle screener together, had a huge rally to the upside. So the length of this rally from 316 to 111, right? It's too crazy that that's going to be replicated. Well, guess what? AMD's damn near doing that. It's almost to, 136, at least, especially from this high that it formed of 122. It was only about $14 away from my target of the length of wave 3, place of the wave 4 low, being replicated for this wave 5 target of 136. So I ultimately expect Advanced Micro Devices will reach 136. I mean, just look at this. This is the left side of the base, the bottom, and then the right side of the base. This was institutions accumulating Advanced Micro Devices this entire time. Huge explosive breakout to the upside. So let's talk about AMD in the shorter cycles because it's another one. You guessed it. It's formed 1, 2, 3, 4, 5 waves from this low. Okay, so no matter how you count AMD, this is clearly a bullish impulse. And how do we know that? Because we just exploded above the wave 3 high. So we've confirmed, yes, this is an ABC correction that has ended. That was a corrective structure. This was institutions accumulating AMD for about 6-7 months. And then in the second quarter, it's the exact same thing, right? June ends, explosion. June ends, explosion. The institutions are trading quarter to quarter. You need to do that too. So if we look at AMD on the smaller degree, very clearly, in my opinion, this is a 1, 2, 3, 4, 5 waves impulse at the very minimum. There's no way to count AMD where this isn't 5 waves from this low. I think one way to count it that clearly probably is not accurate is that this is 1, 2, 3, 4, and 5 waves. Okay, there's no way to count AMD where it hasn't formed 5 waves from this, guess when, early May low. It's a 1, 2, 3, 4, 5 waves impulse. That's probably not the best way to count it. I think AMD most likely looks something like this, where this is clearly a wave 1 or a wave 2 that we have this correction from. So it looks something like this. That's wave 1, that's wave 2. So we need to figure out what's this this huge impulse that we have that breaks, you know, all the way to 122. Well, if we look at advanced market devices, I think it looks something like this, where that's wave 1 and wave 2. So is this wave 3 and wave 4, or is it another wave 1 and another wave 2? It really is inconsequential. We're going to make a new high most likely, and that's going to be, you know, the resumption of the uptrend. So I think one way to count AMD is that this is 1, 2, 3, 4, and then we're looking for a wave 5 higher for AMD. So if we measure the Fibonacci retracements, we can see right now we're right around the 38.2% retracement of this wave 3 impulse. We'll expect a wave 5 higher at the very minimum, you know, in this very short degree cycle to take AMD up into the 120s. Now, what would happen potentially if AMD corrected a little lower? Well, what this could be is a nest where that's not a wave 3 or a wave 4 that is ended. Let's say AMD pulled back and corrected a little deeper, not ending this correction at 107, but let's say it pulled back to 98. Well, most likely, because that's a 61.8% retracement, we'd have evidence that this is a nest. That's a 1, 2, 1, 2 L8 wave nest. We're within, or we would expect to begin a wave 3 of a larger degree, wave 3 higher. But what's important is that this is 1, 2, 3, 4, 5 waves from the low, no matter how you count it. And we know it's a new bullish impulse because we've already broken this wave 3 high. So AMD is given a lot of evidence. Yes, that wave 3 high will hold. That wave 4 low will not get broken. We're within a new bullish impulse right now. The length of wave 3 placed at the wave 4 low ultimately will take AMD to what was an aggressive target of 136. So that's AMD. I expect Qualcomm, Taiwan Semiconductors will follow, but we're going to focus on the growth stocks in this video. Here's Netflix. I like Netflix to as the view that we get in the very short term with Netflix. You know, I really like this look from this May low. It's the exact same May low. Netflix is another one where we formed a 1, 2, 3, 4, 5 large degree wave 1. Then we had an ABC correction at exactly the 61.8% retracement. So if Netflix holds the 78.6% retracement of 495, then very likely this is 1, 2, 3, 4, 5 waves from the mid-May low. This is an ABC correction that ended at the 61.8% retracement. So the length of wave 1, which took less than 2 months, when placed at the wave 2 low, will take Netflix all the way to around 584. That should happen in the next 2 months. We'll have a shallow wave 4 correction. We'll go on a wave 5 higher. And I made the textbook wave 3 target for Netflix visible. I think it would look something like this, where this is 1, 2, and then that wave 3 minimum expectation would take Netflix to around 586. The textbook wave 3 target is the 161.8% extension, which is 606. We'll have a shallow wave 4 correction before we go on a wave 5 higher. Ultimately, at the very minimum, I would expect wave 5 would take Netflix to at least 646. But the bottom line is, let's see if Netflix breaks above this high of 557, confirms the wave 2 correction is done. Then the next area for Netflix is around 606. around 584, which I expect should be reached in the next 2 months. So I think right now the shorter term view of Netflix is going to be very important. If it holds above about 495, very likely heading to, the 580s, the low 600s for this 1, 2, 3 wave 3 target. We'll have a shallow wave 4 correction. We'll go on a wave 5 higher. But if we look at Netflix, very clear 1, 2, 3, 4, 5 waves impulse that is formed from this May low. So Netflix forming 5 waves from the May low. AMD forming 5 waves from the May low. Datadog, ROKU, Cloudflare forming 5 waves. And we look at Autodesk, we look at Okta. This is going to be a sector-wide rally in the software sector. Here's Autodesk, just a gorgeous 1, 2, 3, 4, 5 large degree wave 1, an ABC correction put in a large degree wave 2. We had another wave 1 and an ABC correction put in another wave 2. So we had that low of 265 as the stop around, I think, 288, 289. We were looking for Autodesk to be a setup where if it hold above 265, then the length of wave 1 placed at the wave 2 low gave a minimum target of 359 for Autodesk. So that's the minimum wave 3 target. I'd expect a shallow wave 4 correction before we went on a wave 5 higher. But Autodesk right now looking like it's well on its way to about 359 for that minimum wave 3 target, which is found by taking the length of wave 1, placing it at the wave 2 low, giving us this minimum wave 3 target of 359. This was also a textbook bull flag pattern where you took the length of the first leg of the bull flag, placed at the low of the sideways consolidation. You had a minimum equal legs target from that too. So a lot of classical traders are actually wave theorists and they just don't know it. But that was the 61.8% retracement that capped the wave 2 low. We're within wave 3 right now, heading to 359. Autodesk looking really good. Okta, I really like in this sector. When I first talked about Okta, it was in March. I was expecting a rally to about 308 to 322. In September, we had this huge pop, and then we pulled back. So if we look at Okta on the full count, this is a wave 1 and a wave 2 on the largest degree. So the largest degree in validation is 193. The length of wave 1 places the wave 2 low. Very conservatively, we'll take Okta all the way to 322. I believe from this low, we formed another wave 1 that was cleanly subdivided into 1, 2, 3, 4, 5 waves. Then we had an ABC correction and we put in another wave 2 low. So a slightly closer invalidation level for Okta is this low of about 207. Sorry, this low of about 199. Then from this low, I believe we had another wave 1 and another wave 2. So a closest invalidation level for Okta is about 209. I don't think any of those levels will be broken. I believe Okta is within wave 3 of wave 3 of wave 3. The next minimum target zone for Okta that I really think is pretty programmed right now is that we're going to see Okta go into this wave 3 minimum target zone that we get from multiple degrees. It's going to reach 308 to 322. It will not break below 209. So we got close to that target. If it doesn't happen in the third quarter, I think very conservatively, this will happen in the fourth quarter. We'll see Okta in the lower 300s very conservatively for this minimum wave 3 target. So Okta looking very good. Okta, Autodesk, right? What do these stocks do? They're stay-at-home stocks, right? And that's when we talk about the idea that some of these travel and leisure stocks are pulling back, but the stay-at-home stocks are doing very well. I think that's very interesting. Just something to keep in the back of your mind. Palantir and Unity Software, some of these recent IPO stocks. This is from October 5th to 127, right? That's 3-4 months that Palantir goes 1, 2, 3, 4, 5 waves. So for those of you who believe in seasonality, we're coming up on that anniversary of huge moves in the software sector. This is 1, 2, 3, 4, 5 waves. Large degree wave 1, an ABC correction puts in a large degree wave 2 right at 17. I don't believe 17 will be broken. If it doesn't, that is the wave 2 low. The length of wave 1, place of the wave 2 low, will take Palantir all the way to 52 for a minimum wave 3 target. I think we're going to see that in the second half of this year. it's another one. If it didn't happen in the second half of the year, I think it would happen with the rest of the growth stocks in the first quarter. When we look at Unity Software, we'll see Unity Software forms basically with these exact same dates, an almost identical wave count. It's already broken this wave 1 high. I'm not really correlating the two, but if we see, I don't think Palantir will break this wave 2 low of 17.05. Okay, if it doesn't, the length of wave 1, place of the wave 2 low, gives a minimum wave 3 target of 52 for Palantir. And then what would that mean? That means that for the past 6, 7, 8 months, institutions have been loading up Palantir, and we're gonna know that when it breaks this wave 1 high and everyone's saying, hey, buy this cup and handle. And the classical traders are going to say, buy this strength. The wave theory is saying, why not buy it at the 61.8% retracement? So I really like Palantir. It looks almost identical to Unity Software, which I've talked about a little bit since the Cathie Wood video. I thought I would include it. But if we look from this low, this May 11th low, it's the exact same May 11th low. Unity Software forms a wave 1, forms a wave 2, breaks the wave 1 high. So the full count for Unity Software is that this is a 1, 2, 3, 4, 5 large degree wave 1, and ABC correction put in a large degree wave 2. The length of wave 1, place of the wave 2 low, will take Unity Software all the way to 186. This is another one with Palantir potentially aggressively in the second half of the year. Pretty conservatively, I think, for Unity Software, especially if this wave 2 low of about 92 is not broken. We're within wave 3 right now. We're going to the median of the pitchfork. We are going to see, 186 get reached, in my opinion, definitely in the first quarter of 2022. It's going to confirm this was all a massive accumulation base. Okay, institutions were accumulating Unity Software. They were accumulating Palantir, just like they were accumulating Xpeng and Li Auto from these recent IPOs. Okay, Unity Software, Palantir, they're very early in their life cycles. If they break these wave 1 highs, that's going to be a very good start to what will probably be a long and prosperous upside, just like Li Auto and just like Xpeng. So Unity Software, I really want to see 92 not get broken. If it doesn't, this is wave 1 and wave 2. We're within wave 3 of a larger degree. Wave 3 heading to the median of this pitchfork, heading to 186. So that's Unity Software. Here's Fastly. Here's Salesforce. Here's Adobe and Zoom. Some true, these are stay-at-home stocks. If we look at Fastly, I've talked about Fastly. I really like it as a long-term idea. Okay, if someone, put a gun to my head and said, which of these stocks in this market is Nvidia in the 2000s, what's Bitcoin and some of these e-commerce stocks in the 2010s, I really think it would be Fastly. This is a potential monster. This went on a breathtaking rally from October to from March to October. This is a 5 or 6 month run. This is exactly a 7-month run for Fastly, and these are the exact same dates even that Datadog has formed. Datadog has already broken that October high, but this is a 1, 2, 3, 4, 5 large degree wave 1 and an A, B, C correction where the length of wave A, place of the wave B high is exactly where wave C is ending. We're at the 78.6% retracement, okay? If you ask any Nvidia, any Bitcoin, any long-term, big tech investor, any ROKU investor, any Peloton investor, any Snapchat, Twitter, Facebook investor, they've held through multiple 40, 50, 60% corrections to get to where they are today, okay? You don't wake up in 2023, in 2024, 2027 with Fastly by buying it with a 5% stop. Okay, that's just reality. This is a 1, 2, 3, 4, 5 large degree wave 1, and then this is an A, B, C correction. Get off the bus is what the institutions are telling you. This is the 78.6% retracement. Okay, the only way to play Fastly right now is pretty tight. That 33 is not broken, and the length of wave 1, place of the wave 2 low. It takes Fastly to insanity land. That Fastly goes to 159. It breaks this wave 1 high. It confirms that all of this was accumulation. This is a monster base. And then the length of wave 1, place of the wave 2 low, that's the minimum. Wave 3 target of 159. We have a shallow wave 4 correction that retests the wave 1 high. And then Fastly goes on a wave 5 higher, as high as 262. And then what happens? That's 1, 2, 3, 4, 5 waves. That's all going to form a larger degree wave 1. Okay, so when a stock is very early in its life cycle, when it's a recent IPO, the risk to reward ratio is much higher, okay? And a lot of times it's worth it if you have the evidence. And I think Fastly, we have holistically, this is the evidence of the entire software sector doing very well in the long term, in the same way that First Solar, is the evidence that the clean energy stocks will do very good in the long term. This is 1, 2, 3, 4, 5 waves. This is an ABC correction. The length of wave A placed with wave B high. That's where wave C is ending. At the 78.6% retracement, this is a huge opportunity, in my opinion. Let's just say that. If it's above 33 right now, the literal sky is the limit, because the length of wave 1 placed at the wave 2 low, that takes Fastly to 159. We have a shallow wave 4 correction. We go into wave 5 higher. Fastly's in the 260s. And then that's 1, 2, 3, 4, 5 waves. That's all going to complete a large degree wave 1. I really think it's NVIDIA in the 2000s. It might be Bitcoin in the 2010s. It might be some of these, e-commerce stocks in the 2010s. But go ask an investor who's held Netflix from 2011, that's held, Roku and some of these streaming and e-commerce stocks. It hasn't been, a smooth ride. It's been a roller coaster, and the volatility of these stocks is the price that you pay for upside in the future. And I think Fastly might be worth it. Right now, if it's above 33, in the longer term cycles, the next stop is 159 for a conservative wave 3 target. We'll have a shallow wave 4 correction. We'll go on a wave 5 higher. I don't want to get carried away about any one stock. I really think Fastly is a pretty spectacular opportunity for someone hypothetically that is longer term minded. So this is a wave 1 and wave 2 for Salesforce, a huge wave 3 impulse that ended right around the beginning of September. This is a 5 or 6 month rally for CRM. And if we look right now, we're approaching the 1-year anniversary of Salesforce's consolidation. So what's either been happening is that Salesforce has been being distributed this entire time and it's going to crash, or Salesforce has been accumulated this entire time and it's about to explode. Okay, I think it's the second option, and the count for Salesforce, this is a wave 1 and wave 2, huge wave 3 impulse, and an ABC correction puts in a wave 4 low at exactly the 50% retracement of wave 3. So the length of wave 3 places the wave 4 low, takes Salesforce on a bull flag, wave 5 equal legs higher to about 357. Now, this whole rally is from 330 to about 830. It's exactly 5 months that we can see Salesforce go on a huge rally higher. I don't think 5 months is the right time target, but this could happen quicker than a lot of people think. I think for most of these growth stocks, I'm expecting, pretty conservatively, we've reached the equal legs targets of the 2020 rallies within the first quarter of 2022. What could a more aggressive count for Salesforce be? Well, it could be that this is a wave 1 and a wave 2 again. So it's the exact same minimum expectation. This is a wave 1 and wave 2. We're expecting the length of this rally placed at this low to be replicated. But in this situation, the length of wave 1 placed at the wave 2 low will take Salesforce to 357, but that wouldn't be the top. That'd be the conservative wave 3 target. We'll have a shallow wave 4 correction. We'll go on a wave 5 higher. So let's look at this high on the daily chart. We can see this high is formed on September 2nd after a 5-month rally. So I found Adobe. It looks pretty similar to Salesforce. I think Adobe might be leading Salesforce in this kind of software region. They're very closely related, and they make almost the exact same high on August 31st. If we look at Adobe on the daily chart, this high is made on 9/2. Okay, it's almost the exact same chart as Salesforce. I think Adobe right now is acting as a leading indicator. This is what I'm seeing. This is what I am expecting for Salesforce, is a type of move like this. So for Adobe, that was wave 1. It ended on September 2nd. It had an ABC correction and put in a wave 2 low. The length of wave 1 placed at the wave 2 low takes Adobe all the way to 698. And if we look at Salesforce right now, this is really kind of what I'm expecting. I think Adobe is leading Salesforce. I think Adobe breaking above this high is acting as a leading indicator. Salesforce is about to do the same. And I think we can see a cheat sheet right now of what to expect from Salesforce. I want to talk about Zoom. I want to talk about Alibaba. Zoom, it's probably the poster child of the stay-at-home sector. Okay, there's a couple of ways to count Zoom. This is one of them. It's a 1, 2, 3, 4, 5, large degree wave 1. It's an ABC correction, large degree wave 2. This ends right around the 50% retracement. So right now, if Zoom is above 273, then that is the wave 2 low. This is the left side of a base. This is the bottom of the base, and this is going to be the right side of the base. And we're going to find out that Zoom has been being accumulated for almost 8, 9, 10 months by large institutions. And then the length of wave 1 placed at the wave 2 low will take Zoom all the way to around 800 for a wave 3 minimum target. So I think Zoom is getting ready for an explosive rally higher. We had a little bit of a pop to 400, and then we pulled back. I think right now, if Zoom is above 273, there's a lot of evidence. Yes, that is the wave 2 low. We are going to go break above this wave 1 high of around 588. Confirm that, yes, this was all accumulation. This was all a huge base. And then Zoom is going to be going the length of wave 1, placed at the wave 2 low, all the way to about 799. I think we're really definitely going to see that Zoom breaks above 588 within the fourth quarter and probably starts heading on that run to the 600s, the 700s, and the 800s very quickly. And Zoom, it has extremely low implied volatility. Or it had extremely low implied volatility. We've seen it on the bar chart, straddle and strangle screener with Tesla recently. Options, the options market knows Zoom's about to have a huge move. I really think that move's going to be to the upside. I think Zoom is going to pick up the pace. It's going to hold above 273. Right now, bulls want to see, in the fourth quarter that Zoom will break above 588. Confirm that this was all 8 to 10 months of basing. The length of wave 1, place of the wave 2 low. We'll take Zoom on a run to 800. And in this count, that's not the top. That's the conservative wave 3 target. We'll have a shallow wave 4 correction. We'll go on a wave 5 higher. When we look at the travel and leisure sector and we say, wait a minute, we're expecting that Disney and the Dow Jones, they're going to complete a wave 5 and pull back. This is when I'd be expecting that Zoom is exploding higher when the king of the stay-at-home sector like Salesforce and Zoom, they're going to be taking off while the travel and leisure stocks, in my opinion, are pulling back once they complete 1, 2, 3, 4, 5 waves from that low. That's just kind of what I'm expecting. Okay, obviously, it might not happen exactly like that. Who knows what the fundamental news stories will be, but Salesforce and Zoom, they're showing very bullish patterns that are pretty longer term that may be developing right now. So if we look, Alibaba is another one. It's another stay-at-home stock. This is a wave 1 and wave 2. I believe this is another wave 1, cleanly subdivided into 1, 2, 3, 4, 5 waves. And then Alibaba has an ABC correction to the 78.6% retracement to put in this large degree wave 2. The length of wave 1, placed at the wave 2 low, will take Alibaba into the 350s. And then that wouldn't be the top. That'd be a very conservative wave 3 target. We'll have a shallow wave 4 correction. We'll go on a wave 5 higher. In the longer term cycles, I've got Alibaba going to the 500s. And if we see right now, this is potentially, it's that mid-October high, very similar to that mid-October high that Fastly formed. It's an ABC correction. I think this is another one. It's the left side of the base. We're going to see that Alibaba will reverse at the 78.6% retracement. It's going to hold above 179, and it's going to keep going and form the right side of this base. And I'm looking for Alibaba to form a cup and handle pattern and consolidate above all-time highs. Okay, the classical traders, they're going to say, wait until Alibaba's right here. I think if you're a wave theorist, we can see we have a huge wick on the weekly chart at the 78.6% retracement. If Alibaba is above 179, it could be very similar to Zoom and Salesforce, where a longer-term rally is beginning. So right now, if Alibaba's above 179, I'm expecting this is the left side of the base. That's the right side of the base. We're going to form a cup and handle pattern, consolidate above all-time highs, and head on a wave 3, 4, and 5 higher. Ultimately, I've got Alibaba going all the way into the 500s. Right now, I want to see if 179 is not broken, then that is the wave too low. Alibaba, I really like. In the longer term, bigger picture view, I wanted to talk about PayPal for a little bit. Interesting setup on PayPal here. I think it looks something like this. This is really probably the more short-term setup in this video. That this is a wave 1. That's an ABC correction. We've put in wave 2. We went on this big wave 3 rally higher for PayPal. This is wave 1, wave 2, wave 3 goes, it reaches the median of that pitchfork. So I'll delete the pitchfork right now. I think PayPal looks something like this. This is wave 1. That's an ABC correction. We put in wave 2. We had this big wave 3 impulse that ended around 310. And then we pulled back to exactly the 50% retracement. We put in a wave 4 low. I think right now, the length of wave 1 places the wave 4 low. In the next 2 months, I think with Netflix, we're going to see PayPal going on another rally higher to about 323. I'm not correlating Netflix or PayPal. I'm just saying they both look like they're ready to go on a 2-month rally higher. I think PayPal looks really good. This is a wave 1, an ABC correction put in a wave 2 low. We got a big wave 3 impulse, and then we pulled back to the 50% retracement. So right now, if PayPal is above 262, then I think that is wave 4. The length of wave 1 placed at the wave 4 low will take PayPal pretty short term to 323. So PayPal looking very good. I want to talk about Beyond Meat, Tattooed Chef, CRISPR Therapeutics, and Bionano Genomics. Here's the bigger picture for Beyond Meat. So I've said before, I'm in the Beyond Meat cult. Okay, this is a cult stock. What does that mean? A cult stock is a stock that people feel very strongly about and is prone to wide swings. So what are some examples of cult stocks? ROKU and Tesla, they were big cult stocks in 2020. And really the reason that I'm attracted to these is that they form or they develop very high short interest. So Beyond Meat, regularly has a 20 to 30% short interest. They're very heavily shorted, and that's why they can be prone to large rallies. And if we look at Beyond Meat, this is what I'm thinking. This is the wave 1. That's an ABC wave 2 low. So this high was formed in 2019 in the summer. We got close to breaking it, didn't quite break it. But what could this be? That this is a wave 1 and an ABC is putting in a wave 2 low, and this is an IPO base right here. So we're going to break, in my opinion, in the future above 239. We're going to confirm that Beyond Meat has been being accumulated since the IPO high for the past 2 years. Okay, and if we look recently, we can see on the price overview, Beyond Meat's implied volatility is cheap, okay? I can assure you, Beyond Meat has a very liquid options market, okay? The implied volatility on this stock is not going to stay zero for very long. Beyond Meat is getting ready for a monster rally, okay? Or it's getting ready for a monster move. The wave theory, in my opinion, is very clear. That move will be to the upside. This thing is getting ready to explode, okay? And the bears think it's gonna be to the downside. I think it's going to be to the upside. I think this is wave 1 and an ABC correction put in wave 2. We have another wave 1. We have another ABC correction. We put in a wave 2 low between the 61.8 and the 78.6% retracement. So if we look at Beyond Meat right now, I don't believe 99 will be broken. So if 99 is not broken, then wave 2 of wave 2 is in. We're within wave 3 of wave 3 right now. This rally is from 316 to 125. It's another one where you're looking for this whole rally, this 10-month rally to get replicated from this low that's formed, guess when? May 10th. And then the length of this wave 1 placed at this wave 2 low gives it doesn't sound conservative, but I promise it is a conservative wave 3 target of 272, potentially within the first quarter of 2022. And then we would have a shallow wave 4 correction going a wave 5 higher. But it's going to be a big deal when Beyond Meat breaks above 239. Right now, it needs to hold above 99 and confirm, yes, that is the wave 2 low that we formed at the 61.8% retracement. Beyond Meat is another growth stock that from the May 10th low, very likely has put in a very important low, began a new bullish cycle to the upside. It's, in my opinion, a 1-2-1-2 Elliott wave nest. So we're within a wave 3 of a large degree, wave 3 right now. We're going to break this 722 high from 2019. We're going to confirm that this stock from the IPO high has been accumulated by institutions for the past 2 years. It's another one where when some of the travel and leisure stocks were pulling back in 2020, this stock was doing very well. So Beyond Meat, expect some explosive headlines from Beyond Meat. 0% implied volatility rank and percentile. I can assure you that is not going to last. If we look at Tattooed Chef, it's the only other fake meat company, but it's got a very clean, it might not be the only other fake meat company, but it's got a very clean wave count. It's a 1, 2, 3, 4, 5, large degree wave 1. Then we have an A, B, C correction. Look at this, the length of wave A placed at the wave B high is exactly where wave C ended to the dollar. Okay, that's the equal legs principle. The length of wave A placed at the wave B high is exactly where wave C ended. So that is a wave 1 that is formed, a large degree wave 1 subdivided into 1, 2, 3, 4, 5 waves, a clear 3 waves pullback and ABC correction put in a large degree wave 2. Then Tattooed Chef formed another wave 1 and another wave 2 low. So I think Tattooed Chef, like Beyond Meat, will not break below this low of 15. I think really tight. I mean, that's just too tight. That 18.91 would be the stop for a stock like Tattooed Chef. But I think it very likely is forming another impulse from that late April 20th low. Probably looks something like this. But anyway, I think Tattooed Chef right now is it a nice opportunity? Sure. I like to use it because it's the only other stock that really focuses on fake meat besides Beyond Meat. And I think it's very interesting that Beyond Meat and Tattooed Chef, they're both forming 1-2, 1-2 L8 wave nest. Fake meat might fly together. Right now, the minimum wave 3 target for Tattooed Chef is around the length of wave 1 placed at the wave 2 low, which is 29, to the length of this larger degree wave 1 placed at the larger degree wave 2 low of about 32. So expecting Tattooed Chef to go on a rally into the 30s, and very likely that's going to coincide with Beyond Meat going on a huge rally as well. CRISPR Therapeutics, Bionano Genomics. Okay, I don't know what these stocks do, but sorry, that's supposed to be a joke. This is a wave 1 and a wave 2. The fundamentals of these stocks are very complicated. Okay, so they're big components, I believe, of ARK. They're within this growth sector. And what I'm trying to say is, if someone is a fundamental trader, you got no chance understanding what CRISPR Therapeutics is doing. Anyway, that's a wave 1. That's an ABC correction. It puts in a wave 2 low. Isn't it much easier, instead of becoming an expert in, bioengineering, to just become a wave theorist and realize that's the 61.8% retracement of this rally? And then we don't need to know what the gene editing, headlines mean. Okay, well, let's not pretend we understand those. That's a wave 1. That's an ABC correction putting in a large degree wave 2. And then the length of wave 1 placed at the wave 2 low, which formed at the 61.8% retracement, right? We've got multiple wicks on the weekly chart at exactly the 61.8% retracement. CRISPR Therapeutics, very clearly, in my opinion, will hold above 95, and it looks something like this. That's wave 1 and wave 2. That's another wave 1, and that's another wave 2. I actually do think there's a doctor who follows this channel, so maybe he or she can tell us what's going on in the gene editing sphere. But I can tell you from a charting perspective, this is looking very good. This is wave 1. That's an ABC correction putting in wave 2 at the 61.8% retracement. The length of wave 1 placed at the wave 2 low takes CRISPR Therapeutics to 282. It's another one from 316 to 111, right? That exact same 10-month rally placed at, guess when this low formed? May 10th. Gets replicated. So 1-2, 1-2. We'll see CRISPR Therapeutics head to 282. In my opinion, it's another one that happens during the first quarter of 2022. I want to see right now in the larger degree that 95 is not broken, in the smaller degree that 113 is not broken. If not, CRISPR Therapeutics looking very good. Bionano Genomics, another gene editing stock. Okay, this is another one. It's a little more explosive. It's a 1, 2, 3, 4, 5 large degree wave 1, an ABC correction put in a large degree wave 2. I talked about Bionano Genomics. It went on a 45% run, and then it retraced that move. So I think it looks something like this, where that's a 1, 2, 1, 2 nest, and it's just like CRISPR Therapeutics, where we want to see that this low holds of 4.30, and if it does, this huge rally. This rally's 3 months. This rally's 2.5 months placed at the wave 2 low. The options market is very excited for Bionano Genomics. It's another one. It's all over the bar chart, straddle and strangle screener. I'm pretty sure we can see if we go to the price overview for BNGO. Yeah, we're at extremely low implied volatility right now. So Bionano Genomics getting ready for a large move. This stock has seen some appearances on the bar chart, straddle and strangle screener. So I think that the options market is really confirming this stock's about to have a large move. Right now, the wave theory is pretty clear. If it holds above 4.30, the length of wave 1 placed at the wave 2 low, it takes Bionano Genomics all the way to 19. So lots of upside, very high risk stock, but Bionano Genomics and CRISPR Therapeutics in the gene editing sector, I'm expecting will join Neo, and it will join Tesla. It will join many of these software stocks on large rallies into the first quarter of 2022 that replicate these wave 1 and wave 2 lows that we're seeing across the market. And guess when this May 13th, right, is the exact same May low that so many other growth stocks have already confirmed. That is the beginning of a new bullish cycle. Microvision, I talk about this one a lot. Just wanted to touch on it because it's a growth stock video. Looking good. Microvision looking pretty good. This is a wave 1 subdivided into 1, 2, 3, 4, 5 waves. An ABC correction put in wave 2 at the 61.8% retracement. So that larger degree in validation has not been broken. And if we look at Microvision right now, then we can see that this is still going to continue to be the larger degree in validation of 10.08. We get close to testing it and we've reversed. So right now, I think there's a lot of evidence that Microvision has put in a very important low at 10.08, and we've broken above the wave 1 high. I believe wave 3 is in progress right now. This is wave 1 and wave 2. It's the first leg of a bull flag. We've essentially broken out and now back tested the bull flag. We're going to continue to hold above 10.08. And then on the larger degree, the length of wave 1 places this wave 2 low, takes Microvision all the way to 32. That's another one 5, 6, 7 months out. I expect will be reached, provided we hold above 10.02. But then what happens when Microvision goes, the length of wave 1 places the wave 2 low, that's the minimum wave 3 target. We'll have a shallow wave 4 correction. We'll go on a wave 5 higher. So lots of upside for Microvision if it's above 10.08. And if we look, here's some crypto. Just want to throw this in. Starting to break out. Looking very good for Bitcoin, Ethereum. And we'll talk about Riot blockchain in a little bit. But man, this is looking very good. Wave 1, ABC correction. Wave 2 low, right between the 50% and the 61.8% retracement. I think Bitcoin bulls, they can move that stop up to 28.9K and say, if that holds, then that's wave 1, that's wave 2. The length of wave 1 places the wave 2 low, takes Bitcoin to 90,000. With a shallow wave 4 correction, we'll go on a wave 5 higher, potentially as high as 125,000. So this is another, I'm not quite sure that crypto is going to be grouped with the growth stocks, but it's a sexy stock video, so I wanted to include these sexy cryptocurrencies. They're looking like they're putting in very important wave 2 lows. The length of wave 1, place of this wave 2 low. I think we've got a lot of confirmation. Yes, that is the wave 2 low. Bitcoin's heading to 90,000 for this wave 3 target, having a shallow wave 4 correction, going on a wave 5 higher to 125K. If we look at Ethereum, I mean, this is one where you can't say you don't believe in wave theory. Otherwise, you're not going to be able to do this. This is 4 wicks on the weekly chart at the 61.8% retracement. That's wave 1. That's wave 2. The length of wave 1 placed at the wave 2 low will take Ethereum to 6,000. If you didn't believe in wave theory, then you called all these wicks at the 61.8% retracement weakness. Wave theorists, they called this wave 2, the length of wave 1 placed at the wave 2 low. We're going to see Ethereum go on a run to 6,000, have a shallow wave 4 correction, and go on a wave 5 higher. And if we look at Riot blockchain, this is one where it says that rally could be a little quicker than we think. If we look at Riot blockchain, wave 1, A, B, C correction puts in wave 2. Wave C ends exactly where the length of wave A placed at the wave B high would have taken it for that equal legs target. So wave 1, A, B, C, wave 2 at the 61.8% retracement. And then I believe we formed a wave 1 and wave 2 from that low. And now we've broken this wave 1 high. So I think we're within wave 3 of wave 3 right now. I'm expecting crypto will be very explosive coming up. And we're going to see the length of wave 1 placed at the wave 2 low takes Riot blockchain to 98. In my opinion, likely by the end of the year, aggressively within the first quarter of 2022.